State Bank of India has posted a net profit of 18,331 crore, which is highest among the listed entities in Q2 FY25. But interesting thing is that this is also aided by other income of around 5,000 crore. To discuss the result, we have with us Chairman C.S. Setty. Welcome to ET Now. My first question is, you had an ambition of 1 lakh crore net profit in a financial year. Now, if you talk about operating profit, that is already 55,000 crore in the current year. And before aiming for net profit in a yearly basis, you will of course aim for 1 lakh crore operating profit. So do you think at least this year it will be possible, because 55 is already done?
Thank you, Ankur, for having me on your show. And yes, I think our medium-term goal is that whether we can become 1 trillion rupee net profit company in the country, the first company to do so. We are aspirational about that. But more importantly, as you said, operating profit is run rate indicates that we should be able to reach that operating profit level of 1 trillion rupees this year. The macros are playing well, and credit growth is coming out across the segments. And our efforts to mobilize the deposits has paid dividend in Q2. We have registered good growth. So, and we were able to contain the cost of deposits also, which means that, we are probably heading towards 1 trillion rupee operating profit.
Yes, and one of the interesting thing in the net profit this time was 5,000 crore other income. Tell me where it is coming from. It is the treasury income which has helped you?
So we've been renewing our focus on non-interest income. Obviously, there are 3-4 major sources of non-interest income, which is essentially the conventional non-interest income comes from your loan processing charges, your OCA recovery, the recovery from the written off accounts, and the treasury gains. And these are the 3 major items which we normally look at. While we have done fairly well on the loan processing charges, almost same level as what we have done in the last quarter, we have got benefited on the robust recovery in the written off accounts. And we are confident that this run rate, what we have witnessed both in the Q1 and Q2, will continue. On the treasury side, there were 2 items majorly, the MTM gains. As you know, now MTM gains are directly reflected in the P&L. And we also have acquired, added some duration to our portfolio on the treasury side. And, leveraging that movement of yields, we could book some trading gains also. So it's a combination of trading gains, MTM gains, and the recoveries on written off accounts, which have contributed to the other income. And we would like to focus on all these 3 areas going forward, while the treasury gains are a function of the yield movement. But we are confident that the recoveries in written off account are essentially effort elastic, and we will be able to continue that run rate.
Your credit growth is around 15%. It is towards the higher end of what you have projected earlier. But one of the things which caught my attention was your corporate loan book. What is happening here? Which are the sectors where this credit growth is happening?
There are several sectors the growth is happening in terms of, petrochemicals is one area which we have grown significantly. We have also grown in the road sector. The road sector has been a mainstay of infra financing. Some of the road sectors are essentially the new roads which are coming in, as well as the completed road projects moving into the INVIT. At the INVIT level financing also we have done significantly higher, which is basically a cash flow based lending, takeout financing for the project financing. And we see a good number of projects coming in the solar space, I think renewable space, whether it is solar, wind, or hybrid. We are witnessing a good growth in that area also. So I think it's a broad-based corporate growth which is happening. And more importantly, we also have seen almost 8 percentage point increase on the working capital utilization. That also contributes to the corporate credit growth.
So if you talk about guidance, that is intact at 14 to 16%, more towards 16% than 14?
16%, somewhere in the median. I think 15% seems to be more reasonable estimate as our base increases. We have now currently 39 lakh crores at that, and 15% growth rate on the domestic book seems to be a feasible option.
Right, and also deposits have grown over 9%. What are you aiming here? Do you think that with this kind of base, a double-digit growth is possible this year?
Double-digit growth is something what we are aiming for. While we already have achieved double-digit growth in the term deposits, which are almost 25 to 26 lakh crores. On that basis, we are able to grow at double-digit. 12% is growth rate what we have achieved in the retail term deposits. What is now the focus is going to be there in the savings bank. Current account also we have done fairly well, and savings is something what we have a base of 16 lakh crores in the savings, and if we are able to achieve 8 to 9% on that, overall double-digit growth of 10 to 11% is feasible.
And margins is also something which is coming off quarter by quarter, was past 1.5 to 2 years. Do you think it will stabilize here? Because we have seen the interest expense, which has increased around 16% this quarter. Will there be an impact? 16%
growth is over the corresponding period last year.
Right.
So I think broadly the interest rates on the deposits have stabilized. I don't think there will be any significant increase going forward on the term deposits. And we were able to contain the cost of deposits. In fact, our cost of deposits has just gone up by 3 basis points quarter over quarter, which means that despite the significant growth which is happening, we are able to contain the deposit cost. So our belief is that, and as I was mentioning in the press conference, we have had 3 MCLR increases in the last 2 months, which will give the benefit in the current quarter. So combination of increased yield on the advances and containing the cost of deposits, we are hopeful to maintain the NIMs at these levels.
And NIMs will stay over 3% at least in the current year,
Definitely.
If I talk about exact numbers?
Definitely.
Okay. One last question before I let you go. Your ROA has already crossed 1% last year. But this year, if you talk about this quarter, it's around 1.2% if I'm not wrong. Where do you want to see this financial year your ROA will land, and also your return on equity, which is over 21%?
So our guidance still stays at ROA of 1% and ROE of 15%. I think we are still sticking to it. Anything above is a bonus. Thank you.
Okay.
Thanks.
So you would want to project less and perform more. Thank you so much for talking.
Thank you, Ankur. Thank you very much.
If you like this video, then like, share and subscribe to ET Now.